Good morning, everyone, and welcome to today's webinar, Finding Your Way Through the AML Labyrinth. When it comes to the AML framework, there are always new laws and regulations being adopted and amended. The amount of legal acts and guidelines you need to follow in order to be compliant as a bank, payment service provider, or crypto service provider can be pretty overwhelming. We want to help you better understand all these changes of the European framework, how they affect you and your company, and how to better implement them into your compliance program. By the end of the session today, we hope you feel more comfortable and confident about this topic. So after this short introduction, let's get started with the webinar, Finding Your Way Through the AML Labyrinth. Our speakers for today, Pierre Simon and Daria Patrascoiu.
Yes, thank you. And it's really good to see so many people of you joining today. So once again, also on my behalf, welcome to this webinar. So let me shortly introduce myself. So as a certified compliance professional and a former police officer, my aim is to help organizations detect, prevent, and report financial crime, but also to set up effective compliance programs and increase your knowledge and competence to better manage your integrity risks. In this capacity, I founded Simon Consulting back in 2010 and have helped many banks and other financial institutions such as payment service providers, insurance companies, pension funds, and mortgage brokers with the design, implementation, and improvement of their compliance programs.
Hi, everyone. I would also like to welcome you and to thank you for participating. My name is Daria. I'll also share a few words about me. I have joined the Simon Consulting 4 months ago, so I'm the newest member of the team. I have graduated my master's in Amsterdam last year, actually, in investment law. And before, I am originally from Romania, where I have graduated my bachelor's degree at University of Bucharest and became a junior qualified lawyer, and then continued in the Netherlands in international and European law, focusing on investment law, as well as also practicing a bit in the realm of banking and finance, which is also what drew me to mix these two into the world of AML. So I hope that my insights will also be useful for you today. Now to look a bit at the program for today and to see what we will be discussing. As mentioned, we want to help each of you better understand how the European AML framework actually operates and how they affect, how the rules affect you, how it affects your company, and how to better implement them into your compliance program. We will start by discussing and looking closely at the 4th and the 5th AML directive first, and the transposition into national law, more details, and then also the actual updates. And then we will move on to the second part, discussing the 6th AML directive and its implications for obliged entities and the differences. And finally, we will also give you some practical tips on how to be better compliant with all of these requirements and how to operate your business anywhere across Europe. Now to start the first part of the webinar, I will give the floor to Pierre to discuss the 4th and the 5th AML directive.
Yes, thank you, Daria. So we will start by doing a general recap of the 4th and the 5th AML directives by looking at first the aim of these directives, secondly, their key points, followed closely by the applicability dates, and finally, we will talk about the current status of national transposition in the EU member states. And it's also good to mention here that the difference between the 4th and the 5th AML directives are very small. So actually a better name for the 5th would have been AML Directive 4.1. So moving on and looking at the aim of the directives. So both of these directives have the same aim, which is to combat money laundering and the financing of terrorism by preventing the financial markets from being misused for these purposes. And whilst the 4th sought to extend and replace the previous directive, the 5th made some small amendments in order to keep pace with evolving trends, in particular regarding the way terrorist groups finance and conduct their operations, but also certain modern technology services, which have become increasingly popular as alternative financial systems. And finally, the purpose of these directives was to improve the consistency of AML and CFT rules across all the EU member states. And the fourth AML directive specifically also took into account the updated recommendations of the Financial Action Task Force dated back in 2012. Looking at the key points, these directives apply to a number of obliged entities, such as credit institutions or banks. Secondly, financial institutions, including payment service providers, electronic money institutions, and investment firms. And finally, also designated non-financial businesses and professions, such as auditors, tax advisors, lawyers, notaries, providers of gambling services, and more recently also cryptocurrency providers, which have been added to the list as a result of the update in the AML, the fifth AML directive. So looking at these two directives, we can see that both the directives were introduced to reinforce the rules regarding the identification of customers, especially related to beneficial owners of companies and legal arrangements. And as most of you already know, a beneficial owner is defined here as the person who ultimately owns or controls a company. Secondly, it also required information on beneficial ownership for companies to be held in each EU member state in a central register, such as commercial registers, companies registers, or a public register. And finally, in addition to the national risk assessments to be carried out by each EU member state, the European Commission now also has the obligation to conduct assessments of the money laundering and terrorist financing risks affecting the internal market and related to cross-border activities. Good to mention here as well that the first report of the European Commission was published in June 2017 and is updated every 2 years. This report or assessment is also referred to as a supranational risk assessment. So let's look at the main obligations. So those subject to these directives must take additional safeguards such as enhanced customer due diligence for situations of higher risks, such as trading with banks situated outside of the EU, and in particular when dealing with natural or legal entities established in non-EU countries, which have been identified by the Commission as high-risk non-EU countries. Secondly, take supporting measures, such as establishing appropriate internal preventive policies, which also include group policies and procedures, and ensuring the proper training of personnel. And thirdly, report suspicions of money laundering or terrorist financing to the public authorities, which, at least in Europe, but also globally, are the financial intelligence units. So, from when do these directives actually apply? Looking at the fourth AML directive, this has applied since the 25th of June 2015 and was originally supposed to become law in the EU member states by June 2017. This deadline was, however, further extended by several amendments, in particular by the fifth AML directive, which had to be fully incorporated into EU countries' national law by the 10th of January 2020. So now looking a little bit closer into national transposition. So member states can choose the form and methods for transposing directives into national law. However, they are bound by the terms of the directive as to the result to be achieved and the deadline by which a transposition should take place. National authorities must notify the European Commission of the measures they have adopted. The European Commission, on following this notification, will verify the completeness and correctness of the transposition of EU law into national law. And in case of incomplete, incorrect, or non-transposition, the European Commission can also decide to initiate legal proceedings against one or more EU member states. And as some of you might know, some countries have had issues with the transposition of the fourth and the fifth AML directives. This is also why the European Court of Justice has issued fines for several of them because of incomplete transposition. For example, Ireland was fined 2 million euros, whilst Romania was fined 3 million euros for not completely transposing the fourth AML directive into their national local law. Now, where can we actually find information related to the transposition of the fourth and the fifth AML directives? So, to obtain an overview of all the national transposition measures or legal acts which have been adopted for the specific directives, for instance, the fourth AML directive, by all of the EU member states, you can simply go to the webpage of the directive in EURLEX and then click on National Transposition in the left-hand menu. And if you're not yet familiar with EURLEX, this is the official website of EU law, such as the AML directives and other public documents of the EU. If you're doing business across different countries in the EU, this can be extremely useful in finding your way through the various AML-related acts. And some nice facts to mention here. In relation to the transposition of the fourth AML directive, it took in total 917 measures or legal acts to enact the 27 EU member states combined to be able to transpose all the requirements of this directive into the national legal system. This is approximately 34 measures per individual member state. Maybe some fun facts also to mention here is that the top 5 of countries with the least measures to be able to transpose the directive into national law is Greece with only 2 measures, followed closely by Germany with only 3, and then Cyprus, Luxembourg, and the Netherlands, which only needed to take 6 legal acts or measures to be able to implement the fourth AML directive into their national legal systems. Now, looking at the countries with the most measures, we can see a big difference. Looking first at Portugal, 188 legal acts, followed closely by the Czech Republic with 96, Hungary 82, Croatia 69, and finally Finland with 58 measures. So we can see a big difference here between the number of measures needed for these member states to implement the same AML directive. Now, looking at the fifth AML directive, we can see a big improvement in relation to the total number of measures needed to transpose these directives into the national legal systems. This was only 496 compared to 917 for the fourth AML directive. So that's a big improvement. And for those of you that are football fans and have been actively following the group stage of Euro 2021, know that Romania has unfortunately not been part of this year's competition, but we still wanted to include them in this slide for comparison purposes. So let's first start with my home country, the Netherlands. The Netherlands has transposed the fifth AML directive by 7 different measures or legal acts. These are, for example, the Implementation Act and Decision amending the fourth AML directive, and secondly, the Implementation Act and Decision on registration of ultimate beneficial owners of companies and other legal entities. The Netherlands' primary AML legislation is the Money Laundering and Terrorist Financing Prevention Act, also known in Dutch as de Wet ter voorkoming van witwassen en financieren van terrorisme, or WWFT in short. This act sets out the legal standards for AML in the Netherlands and is intended to protect the integrity of the financial system and public confidence in the economy. And finally, in accordance with this, with the AML directive, the WWFT requires all obliged entities to take a risk-based approach to AML. This means they must perform risk assessments of their customers and adjust their AML responses to reflect the level of risk that they present. And now let's have a closer look at Romania.
Yes, I will take over and discuss a bit about my home country, which is Romania, where, as you can see in the picture, there were 24 measures taken in order to transpose the directive. If this is efficient or not, it's of course debatable, but it is definitely a slightly different approach in transposition, which you as a business, if you're doing business in several countries across Europe, you should be acquainted with how the procedure is going in all of them. And in the case of Romania, there is a main act for combating money laundering and terrorist financing, which is Law 129 of 2019. And this can be considered the Romanian AML Act of some sorts, because this is where all the directives have been transposed. So the fourth, the fifth, now also the sixth are being transposed into the same document. However, this act and the EU AML directives have effect on multiple sectors. So what happens is that this will trickle down in all the relevant laws that already exist, such as the criminal code, the commercial register law of enterprises, credit institutions, investment funds, tax procedure, cryptocurrency law, and everything, because there is a special and a very separated law for each sector. And if we also look at the subject matter of how it is transposed, if we compare the Netherlands to Romania and also other countries, and in the Netherlands, the actual crime of money laundering is being regulated in the criminal code, in the Dutch criminal code, which is different from Romania, where this is part of lex specialis. It is not present in the criminal code. It is only present in the AML Act. And that's where you can find all the other terms, the sanctions, the types of money laundering, and so on and so forth. So you can also see that there are some differences in transposition, which are bound to happen because of the system of the directive, because the procedure is that the member states do have some sort of control over how they're transposing it. So of course, you will also have differences. Now, if we move on and we look a bit at the fifth directive more in detail and see how exactly it has changed from the fourth, what it has updated. If we look first at banks and other financial institutions, it is important to mention four big updates. First, if we discuss about CDD, and more specifically the cases where businesses are exempt from conducting CDD, under the fourth AML directive, entities had the opportunity to not conduct CDD in the cases where there was electronic money involved in prepaid cards in the amount of 250 euros or less. What the fifth AML directive does is that it lowers the threshold to 140 euros, so it becomes stricter, and it also adds several conditions, such as the fact that these instruments are not reloadable, and also that the transactions need to be coming from a European Union territory or a territory that has similar AML legislation. Now, if we move, still discussing about due diligence, but now discussing about enhanced due diligence, under AML 4, parties were already required to undertake EDD in the case of businesses with clients from high-risk third countries. However, what the fifth AML directive does is that it underlines this by making it a compulsory measure. So you have a mandatory obligation to perform EDD when doing businesses with clients from high-risk third countries. Moreover, the member states now have more power in this aspect, because the member states can decide on their own to stop firms from opening branches in high-risk third countries, or the other way around, by preventing other companies originating from the high-risk third countries to open branches in the member states. In order to find the countries and to be sure that you're up to date with the list of high-risk third countries, the instrument is the European Commission's list of high-risk third countries, which is aligned with the FATF gray list, or the so-called list of jurisdictions under increased monitoring. And maybe a relevant update for you to know as well, the fact that actually yesterday on 23rd of June, Malta has been officially included on this list, and it is a relevant update at the European level, because it is the first time where a EU member state has been in this situation and has been included on a gray list, which is maybe also relevant for you to monitor moving forward. Now on the next point, if we look at politically exposed persons, under the fifth AML directive, now member states must issue a list of specific functions which qualify as prominent public functions to make sure that any individual who is a potential politically exposed person is correctly identified, is correctly monitored, and correct measures are taken against these persons. In light of this, a very relevant case that we should discuss is the most recent case that happened with ING France that was actually fined in March of 2021. And the French AML regulator basically fined ING exactly for having incomplete AML measures, and more specifically, incomplete measures relating to PIPs, because the bank did not know that some of their clients were actually politically exposed persons and that they were presenting a high risk of bribery and corruption. Now, as a takeaway, it's important for you and your business to know that identifying PIPs correctly is a very, very important point of your AML framework. Also, adopting a risk-based approach for them in order to, of course, prevent the criminal activity from happening, but also from avoiding fines, which we see that the AML regulators are very, very eager to attribute and will very promptly attribute, which has happened throughout Europe in the past years, increasingly, and especially also in the Netherlands, as we've seen that a lot of the main banks have been fined in the last years. Moving now to the last update relating to banks and financial institutions. If we discuss a bit about the ultimate beneficial ownership information, Article 30 imposes now greater transparency and makes the data available to competent authorities, to other service providers if they demonstrate legitimate interest, and also to any member of the public without needing to demonstrate legitimate interest. I will give the floor to Pierre to dive a bit more in detail about the UBO register.
Yes, indeed. And as mentioned by Daria, Article 30 of the fourth AML directive requires information on beneficial ownership for companies to be held in each EU country in a central register, such as commercial register, companies register, or a public register. Now, recently, Transparency International published a very interesting article, which was called 404 Beneficial Owner Not Found. Are EU public registers in place and really public? And this is an interesting article where they first started to state, of course, the positive side related to the UBO registers in Europe. One of their statements is that it is no longer a secret that anonymous shell companies are the vehicle of choice for the corrupt and criminals, and that new cases of cross-border corruption and money laundering are reported almost on a weekly basis, where perpetrators often hide behind these secretive corporate structures. But most notably, looking at 2015, the fourth AML directive required countries to establish beneficial ownership registers. So, looking a little bit more into detail, who actually complied and who didn't. So 3 years after the directive's adoption, and more than a year after the deadline for transposing the key measures at a national level, Transparency International has taken stock of whether countries across the EU have actually implemented measures to improve transparency in company ownership. The great majority of the countries across the Union, 24 out of 27, have at least a private central beneficial ownership information register in place. The only 3 countries that have not yet established any type of beneficial ownership registers are Hungary, Italy, and Lithuania. Non-compliance with the EU rules becomes much greater. However, if we look at whether EU countries have established public beneficial ownership registers, we can see that still 6 countries, being Cyprus, the Czech Republic, Finland, Greece, Romania, and Spain, have failed to comply with the deadline and have not yet opened up their registers to the public. In most of these countries, access to the data can still be granted to the media or civil society if they prove they have a legitimate interest.
If we move on now to changes brought to non-financial businesses, what the fifth AML directive does that is very new and very important is that it extends the scope of application and adds new obliged entities. We will focus, however, only on crypto service providers because this is the most important stakeholder that is being introduced. And these include virtual currency exchange providers and custodian wallet providers. Now that these are part of the AML directive, maybe if any of you are in this situation, being part of a crypto service provider, it is maybe important to know that you have to comply with all the obligations brought not only by the fifth AML directive, but also the fourth, also the sixth. So any directive that falls in this spectrum will have obligations that you will also need to respect, which means conducting CDD, conducting risk assessments, reporting suspicious transactions, and so on. So all the obligations that are part of the AML framework. Moreover, more specifically for crypto service providers, what happened is that anonymity has been eliminated, and now financial intelligence units can obtain the addresses and identities of owners of virtual currency. And most importantly, the crypto providers will also have to be registered with the competent authorities. However, no license is required. But this is an important discussion because the discussion between registration and license has been particularly relevant in the Netherlands, especially in the most recent case between Bitonic and DNB, if maybe you are also aware of this case. But just to have a quick overview of what happened in this case is that in the Netherlands, DNB is the one that is responsible with registering crypto service providers. However, DNB has taken a step forward, and not only that it took over the registration process, but it also implemented this requirement stricter than maybe it was necessary. Basically, DNB expects crypto service providers to screen every transaction of their customers and to establish the identity of their counterparty, and also check the sanctions list, which means that they want to prevent customers from having business relationships with sanctioned persons. However, the main problem here is that this requirement also applies to providers that only allow transactions from customers to their own wallets, which is the case of Bitonic, because Bitonic is a company that only allows customers to send virtual currency to their self-managed wallet. So therefore, they don't do any business with third parties. This is also why they consider that this requirement was extremely unreasonable. It was excessive for their company. It was also excessive for their customers. So that's why Bitonic brought DNB to court and claimed that this is indeed too burdensome for them and too onerous, and has also argued that basically what DNB is doing is that it's turning the registration requirement into an actual license requirement. Now, if we look at the updates that have happened in this case, on 7th of April this year, the Court of Rotterdam has decided at first not to suspend the requirement and has asked for further clarifications from DNB on why is it necessary to have such a strict registration requirement. And then on 19th of May of this year, DNB has formally acknowledged that the requirement is indeed excessive and unlawful. However, it only revoked the measure for Bitonic, so only on a case-by-case basis. Therefore, the measure is still in place. So this is also something that is probably going to cause more issues in the future in the crypto sector. Now, with this case in mind, I would also like to end the first part discussing about the fourth and the fifth AML directive, and open the floor to you if you have any questions on this topic before we move forward.
Yes, indeed. And just looking at the Q&A part, unfortunately, I don't see any questions coming in. So I would like to encourage all of you, if you have any questions, please use the Q&A part and ask your questions. Some of the questions we can answer on the go. Others we will do at the closing when we have a specific Q&A session. So please feel free to ask questions so we will be able to answer those. And I think now we can move on, Daria, since there are no specific questions, to the sixth AML directive.
Yeah, if anyone has any questions, also throughout this part, you can always just leave them in the chat, and we will discuss them at the end. If we move on now to the sixth ML directive, and first, I would also like to point out why exactly we have made this structure, why we have split it into fourth and fifth, and then discussing the sixth. It's relevant to know that even though it is known in the ML industry as the sixth ML directive, it is not actually, it's not a continuation of the fifth and the fourth, because the fifth is basically amending the fourth directive. However, the sixth AML directive is basically a completely new act that has also a different scope, because the fourth and the fifth are focusing on prevention of the use of financial systems for the purposes of money laundering and terrorist financing, while the sixth is focusing on combating money laundering by criminal law. So only in the criminal spectrum, all the measures are relating to this. And if we look at the key points that are brought, first we'll discuss about harmonization of the definition of criminal activity, liability and sanctions for legal persons, punitive measures for natural persons, as well as international cooperation. But before we go a bit more in detail into the updates, I would also like to look at the timeline of the sixth ML directive, because the transposition deadline was in December 2020, and the implementation deadline has just passed now in 3rd of June 2021. And also, as Pierre discussed in the beginning, we see that there have been many issues with transposition throughout the time, and these also continue now with the sixth ML directive. And maybe the first point that is necessary to mention here is that the sixth ML directive was adopted only 4 months after the fifth, and as a consequence, also their transposition deadlines were very close to each other. So both of them had to be transposed in 2020. And as we can see today, there are still countries that are behind, that have had delays, and also countries that have zero measures at the moment when it comes to the sixth ML directive. And some of these are Italy, Ireland, Greece, Denmark. So coming back to you and coming back to banks and other institutions in the private sector, and why this is relevant for you is because, of course, you are targeted by this directive, and only having 6 months for implementation is quite a short time, especially in the states where transposition is not being done properly, and also when you don't have any guidance offered by this, so you will of course suffer. But in light of this, it's also important to remember to always keep up to date with the new regulations, even if they're at national or European level, and also be proactive and have the initiative to act upon the measures, and have a proper implementation of the ML framework, even if this does not happen at the national level, because otherwise you will still suffer in one way or another if this does not happen. Now, if we dive a bit more into the specifics of the sixth ML directive, I think the most important one that should be mentioned is, of course, the list of predicate offenses, because some of these have been in other forms before mentioned in some of the directives, but never in such a way, never a harmonized and clear list of what are the predicate offenses, more specifically the underlying criminal activity that can lead to money laundering, and that is sanctioned under the AML framework. Some of them, of course, being organized crime, terrorism, human trafficking, corruption, and so on. But maybe worth mentioning that the new offenses that are being brought to the ML framework are cybercrime and environmental crime. Some of the sectors that have been in very heated debates in the last years, of course, especially the very elaborate, the very advanced digitalization of the world, and also our current crisis with the environment, which of course leads to these crimes in some way or another. Now, it is also important to note that this directive does not cover all the crimes that are related to money laundering and fraud, because this is more on the private spectrum. However, on the public spectrum, there is a different directive that focuses on the fight against fraud of the union's financial interest by means of criminal law, and it is also known as the PIF directive. And in charge of enforcing this directive, there is a new European body, which is the European Public Prosecutor's Office, which has actually just become operational as of 1st of June this month. And I will let Pierre elaborate a little bit on EPO.
Yes, thank you. And indeed, this is a really interesting development. So as some of you might know, every year, cross-border VAT fraud causes an estimated damage of approximately 50 billion euros to the budgets of all the EU member states and the EU as a whole. In 2017, member states reported fraudulent irregularities of around 500 million euros. So that's also one of the main reasons that as of the 1st of June 2021, so recently, the European Public Prosecutor's Office, or EPPO, launched its operations and started to investigate and prosecute crimes such as fraud, corruption, and money laundering affecting the Union's financial interests that were committed after the 20th of November 2017. As of this date, EU institutions and bodies, as well as the competent authorities of 22 member states participating in the European Public Prosecutor's Office, shall without undue delay report to the European Public Prosecutor's Office, and any criminal conduct in respect of which it could exercise its competence. Any individual can also report alleged cases of fraud and other crimes affecting the Union's budget directly to the EPPO. Note that for the other 5 non-participating EU member states, such as Poland and Hungary, fraud investigations are still being conducted by the European Anti-Fraud Office, OLAF. The main difference between OLAF and the EPPO is that OLAF can only issue recommendations to the relevant national and EU authorities to take specific actions, whilst EPPO can actually prosecute these cases themselves and have them tried in any national court in the European Union. And finally, as mentioned, EPPO has now started to investigate financial crime involving the EU budget, which is set to increase as the EU is rolling out its 750 billion euros recovery fund on top of its already existing 7-year 1.1 trillion framework. So in short, we expect that the EPPO will have a big impact on your day-to-day business activities, especially considering the fact that it's supranational, and it also has the authority to focus on large money laundering cases. So with that said, we think it will have a big impact in the future. They already started doing investigations, for which soonly we expect to see some cases being brought up against the courts.
Yeah, thanks, Pierre, for the insights in EPO. Now, just to go back to the 6th AML directive and look at the last changes that are being brought. First, aiding and abetting is now punishable as a criminal offense in all member states. This has been, of course, in many states, it has been already a criminal offense and was punishable, but now it's at European level. It has a different rank, it has a different priority when it comes to legislation. In more detail, this means that any individual, any business that helps criminals hide funds will be themselves committing the crime of money laundering itself, and also attempting to conduct the alleged criminal activity is also punishable. Now, on the last point regarding liability and sanctions, which has also had some major changes. First, the 6th AML directive sets a maximum term of imprisonment for natural persons, which is of at least 4 years, which can be, of course, accompanied by other sanctions if that's necessary, and also very relevant by aggravating circumstances. And some of the most relevant that have been added are the offender being an obliged entity committing the crime in the exercise of their professional activity, and also the laundered property being a result of organized crime or terrorism, human trafficking, and some of the very serious crimes that are mentioned also in the list of predicate offenses. Now, if we look at legal persons, a very relevant update is that under the 6th AML directive, legal persons are now criminally liable for offenses committed for their benefit by any person in a leading position. More specifically, a leading position means a person having power of representation of the legal person, having authority to take decisions, also having the authority to exercise control. And maybe even more important is that the legal persons are also liable for the failure to prevent money laundering. Now, this is very important for you and for your institutions, is because even if you're not found guilty for the actual crime, you will still be responsible for a lack of effective compliance program. And with this in mind, we are also going to be discussing in our last section of the webinar a bit of our knowledge and a bit of what we have as tips and tricks on how to be better compliant and how to implement an effective compliance program.
Exactly. So if you look at how actually to be compliant, looking at fines and penalties, we can see that a lot of fines and penalties have been provided in 2020 for AML non-compliance. Already in this year, 2021, the expectation is that a lot of records will be broken. Looking at the number of fines, we see that approximately 12 billion was paid only by banks in penalties last year. And as of today, 17 banks have already been fined over $1.3 trillion, which is yet another blockbuster year for AML penalties. This year, it's not just banks that are on the hit list, but many gaming and gambling platforms have also joined the league. Moreover, regulatory authorities have levied hefty penalties on crypto exchanges too. So how to be compliant? Well, first of all, it's key to know and understand the obligations which are laid down in the EU AML directives, but also other relevant regulations and decisions. Secondly, knowing and understanding the different regulatory obligations in the national AML legislation of those jurisdictions where your organization has business activities. Besides the regulatory obligations, it's also highly recommendable to keep track of all relevant international and industry standards, such as the FATF recommendations, the Wolfsburg Group publications, and regulatory guidelines issued by the national competent authorities or any other AML CFT supervisory authorities. The best example is the recently updated Money Laundering and Terrorist Financing Risk Factor Guidelines, which were published combinedly by the European supervisory authorities. Looking at these Money Laundering and Terrorist Financing Risk Factors Guidelines, in accordance with Article 16.3 of the EBA regulation, competent authorities and financial institutions, including banks, in the European Union must make every effort to comply with the guidelines on customer due diligence and the risk factors banks and other financial institutions should consider when assessing the money laundering and terrorist financing risks associated with these individual business relationships and occasional transactions. Looking at the Netherlands, we can see that the Dutch Central Bank, DNB, which is also the main AML regulator, has published many interesting guidance documents, such as the SIRA guidance. And maybe shortly explaining the SIRA, SIRA stands for the Systematic Integrity Risk Assessment, which is goes a little bit beyond only the obligation to assess money laundering and terrorist financing risks. So it covers the whole spectrum of integrity risks, including fraud, corruption, conflict of interest, you name it. And last but not least, there's now also the new ISO 37301 compliance management standard. And this new standard builds upon the already existing ISO standard 19600, which contains a framework for all organizations, also non-financial institutions, to actually design, build a compliance program containing a combination of all different best practices and requirements across the globe. With this new standard, the big difference compared to the old standard is that the new standard is a certifiable standard. So it is possible also for organizations to benchmark their program. And if they want, they can also become certified against this new standard, which is a way to benchmark against similar companies in the same sector. And it's a consistent way of looking at building a compliance framework. Now, moving on and looking, of course, closely to the Netherlands, we can see that the number of unusual transactions, and it's good to mention here that the Netherlands is the only country within the EU that does not have an obligation to report suspicious transactions, but only unusual transactions. Looking at the Dutch banks, last year, approximately 240,000 unusual transactions were reported by the Dutch banks alone. Of these, approximately 40,000 transactions have been declared suspicious by the FAU Netherlands. Comparing that to 2018, that was only 12,000. So this means that unusual transactions account for almost 40% of the total number of suspicious transactions in the Netherlands in 2020, which, in my opinion, is a good result from all the transaction monitoring departments. Now, the majority of suspicious transactions, which is approximately 73%, relates to transactions of 10,000 euros or less. This is a good reminder to remember that money laundering doesn't just happen in the big numbers. Now, this annual report, which is a must-read, is currently only available in Dutch, unfortunately, but it can be found and downloaded on the website of the FAU Netherlands. Now, up until now, we look back. We looked at, of course, the fourth and the fifth AML directives, but also on the requirements based on the sixth AML directives. Now, looking a little bit forward, there are some nice developments looking back to 2020, but also forward to this year and the upcoming years. We can see in first instance that Europol recently established the new European Financial and Economic Crime Center, EFEC, back in 2020. But also the EPPO, which we discussed, became operational as of the 1st of June 2021. And also interesting to keep in mind is that the FATF and the Moneyval in Europe is currently starting to conduct mutual evaluations of some European countries. Firstly, Croatia, Poland, France, Germany, Luxembourg, and the Netherlands this year in 2021. And next year, Romania is also on the list for the mutual evaluations. Looking at some other interesting developments, there is the new AML supervisor at EU level. This is pillar 3 of the action plan, which is highlighting that due to the way that all these AML rules are supervised in the member states, the current system of supervision is prone to develop gaps. We have seen that, of course, with transposition deadlines not being met, some countries being fined for not transposing in a timely manner, but also at the large number of measures or legal acts needed to transpose the directives. So two important developments. One, of course, is that there will be a central European AML supervisor, which will be able to supervise all financial institutions across the European Union directly without any interference of local competent authorities, and also to fine them on a consistent basis. Next important point, which is closely aligned to having a European central AML supervisor, is that there will be also a new AML CFT regulation replacing the AML directives. This is comparable, of course, but we have seen also in other compliance areas such as privacy or data protection, where the directive was not as effective as expected. And now we have a GDPR in place, which leads to better harmonization of EU law across the EU member states.
As a last point, if we discuss a bit about more the practical side and look at what it means to have an effective compliance framework, most of you are probably aware of this, and if you also look on the slide, there are four main pillars that need to be respected. First, you need to have an effective system of internal policies and procedures and control measures. You need to have a designated compliance function with the compliance officer, which most of you are probably a part of already. Also, ongoing training program and also an independent audit function. However, I would like to put a bit of a focus on the third one, which is an ongoing training program, because this is one of the components that is often receiving the least attention, and in our opinion, it is one of the most important ones, and it's especially receiving least attention compared to other implementation processes, compared to, for example, remediation projects for KYC files or for implementation of advanced transaction monitoring systems. Compared to this, the training side is always a bit left on the side, if so to speak. And if we also look at what the regulators are focusing on, we also see that there is a big emphasis put on trainings. And also, if we look at the new ISO standard, which Pierre also discussed earlier, the ISO 37301 also has a key requirement when it comes to training. And so having this standard in mind, in order to have we believe that even if you don't want to certify against the ISO standard, you should still have it in mind when creating your compliance program, and also always having in mind that the training program is very important. And just to put an emphasis on this, on why we value it so much, it's also because we are passionate about knowledge sharing, and when we want to help you, and we want to help anyone that has questions, has clarities about this, which is also why we have launched a YouTube channel, which has some short, basic explaining videos for the main concepts of AML. And this is what we have done until now. If you're looking to answer any of these questions, but also if you have any new questions, if you have any more in detail questions that you would like us to answer, you can always go in the comment section of our YouTube page. Also, contact us on email or anywhere else, and then we can help you actually answer those questions, or maybe even make new videos about them. And as a last point, also a very special project for us is the fact that we are going to be launching our first training program in September, and we're going to go in a very practical side of AML. We're going to go into how to conduct a risk assessment, how to conduct a proper business-wide money laundering risk assessment. And we hope that you will also join us there, or if you have any questions, if you've ever had problems with conducting risk assessment, if you've ever wanted to do it yourself without going to other external services, if you just want to learn some new tips and tricks about risk assessment, we hope you will also join us then. Now, with this in mind, this is our last part of the webinar, so we hope you did enjoy and had some relevant insights. And if you have some questions, we also open the floor now.
Yeah, let's move over to the Q&A section. I believe there are a couple of questions that came in. Pierre, can you take the questions?
Exactly. Yeah, two questions. The first one, Wessel Breukelaar. Is there any guidance on the scope of the aiding and abetting extension under the sixth AML directive, or will that be provided in the future? Daria, should we answer this question?
At this moment, as far as I'm aware, there's no proper guidance on this coming from a European level. Of course, as I mentioned, also in the Netherlands and also in Romania and in several member states, in my knowledge, this is already mentioned as part of the criminal code as well, in most of them. So I guess that guidance is only provided at national level, and until now, it's not really something that's fundamentally different from what the states are doing, but just in terms of rising it at a higher rank of European law.
Exactly. And also still, the floor is open for any questions. In the meanwhile, there's also a second question from Christina. Given the high amount of predicate offenses, what are your views on adverse media checks, particularly for payment institutions dealing with merchants which have their own customers? Does the obligation of screening checks stop with the merchant? Yeah, I think this is a really good question. Of course, looking at adverse media checks, this is always a difficult one, which is underestimated. The basic checks, of course, it needs to be done. Normally, you see within institutions that they use third parties. But the main question here, of course, is where does it stop? So do you need to screen? Do you have an obligation to also screen your own direct customers or also the merchants? In principle, it's the obligation is to screen customers. But of course, depending on the organization's own risk appetite, the specific risks that are in place or have been identified, one measure can also be to go a step further. This is, however, not a clear obligation. The obligation is only to check customers and any adverse media being found on them. But if and when relevant or applicable, then also the step forward needs to be taken. But it's all on a case-by-case basis.
Thank you, Pierre and Daria. Thank you for everyone for attending today's webinar, Finding Your Way Through the AML Labyrinth. If you have any other questions, please feel free to send us an email or connect with us through the website or social media channels. You'll also receive a follow-up email within 48 hours with a link to view a recording of today's webinar if you would like to review certain parts of it. On behalf of Simon Consulting and the presenters, thank you for joining us today and have a great rest of the day.